Okay, man. It's no worries. Hey, what's up, everybody? What's up? Happy New Year to, I don't know, what do you guys want to call it? Dividend Nation? What do you call it, Darth?
Dividend Warrior Nation. How about
There
that?
we go. There we go. Well, we're here. We made it to another year, and we're gonna just chat about what we're buying, our top picks heading into the new year. I was talking with these guys and saying, I don't know. Do you guys feel the same way when you see other creators say like, these are the stocks I'm buying in 2023? And for me, at least, I'm like, what? Like, you know what you're going to be buying in November of 2023 right now. So,
Yeah,
what do you guys
I
think?
mean, I get what you're saying for sure, and I don't think it's just like an enticing title, like it's an enticing video topic, which is why they do it, and we know that, but the I don't think the audience realizes quite well. Some people don't quite realize that, but yeah, but like to your point, you can't say in January which stocks you're going to be buying in October, um, which is kind of what titles like that indicate a little bit. So it's good. I think it's good we stayed away from it and did something different.
Yeah, you know what? It is funny that, as you guys know, and most of you that in the community know, I've been listening to all of the Berkshire annual meetings. It's been kind of interesting. And I will say, I'm starting to catch some redundancies from Warren and Charlie from their shtick. And if you don't listen to them all the time, they sound really fresh and unique, but they start to replay some of their best hits, I guess. But one of the things that they said is that there's never been a grand master plan for Berkshire. He said, we're literally just have open minds all the time and we just see what opportunities are constantly presenting themselves. But he said, we have no end goal in mind. We just want to own great businesses at great prices. And if they become overvalued or that mode starts to change, then we'll consider selling them. But he said, otherwise, we really don't have a plan. And people find that hard to believe.
You know what's interesting about Berkshire, or unique, I think, about Berkshire is that, or Berkshire, is just throughout the decades, they really didn't seem to care what anyone else is doing. They were just doing their own thing and stayed true to their investing style. And you know, and I don't know, I guess just like I said, just did their own thing, and it worked out pretty well for them. I was just reading before we all went live. I was reading a little bit of Poor Charlie's Almanac right here, and there was one section in it. It's just a lot of quotes from Charlie Munger, basically. And one of his quotes was talking about the tech sector, right? And because there was a period of time where they stayed away from it, just circle of competence. You guys are familiar with that, but so there was a period of time where they completely stayed out of the tech sector, and well, Charlie said, people get so they feel like they're getting left behind when they see people making money in all these other places, like in the tech sector in this instance. But he was like, we didn't feel that at all. We were, just because someone's getting rich faster than you are doesn't mean that, like, you shouldn't get too bent out of shape about it, because you're probably doing just fine. And so, like I said, they kept their heads down and stuck to their methods through and through. And I thought that was, I don't know, it's a good lesson, I think.
Well, I'll say this too. Kathy Wood, she had ARC and she was doing really amazing, and all of a sudden went way downhill. And
Yeah.
Warren Buffett's winning in the long run. So if you look at his stocks and stock price, I mean, he's doing something right. He's taking a conservative approach and he's following his principles. So if you follow your principles, usually you get better results.
Yeah.
And he keeps
And
learning. That's his trick.
Yeah.
yeah, man. That's so going through this book, that's one thing that, just speaking of redundancy, you hear Charlie mention that all the time. He says something like, I don't know anyone who was truly like great and wise that wasn't constantly reading, or constantly making an effort to learn more. And that's one of the good things about or cool things about being an investor, is it gives you an opportunity to expand your knowledge. Like, if you're going to get better as an investor, you have to learn more. You just have to do it, because there's hundreds of different industries, all these different sectors that we need to learn about. And Darth, to your point too, just in regards to your principles, that you establish that over time. And I think as time goes on and we get further and further down this path, I think individually we can all kind of, we have a picture of what our philosophies might look like, and how those have changed year over year, which rightfully so they should.
You know what? I love this. This made me think of how differently we think as dividend investors, where may 2023 be better to our portfolios. And it's funny, Chris, because I think of and I talked about this, I think yesterday, that volatility just gives us such a great opportunity to buy better companies at lower prices. And it's funny, like as an investor, we should want to see the market like going down when we have no desire to sell in the short term because we're not trading. So I think that's funny, and it's just great. And then if the market should happen to go up, hey, so be it. We get to see some capital appreciation on our holdings. So why don't we use that as a springboard to kind of just jump in real quick and touch on what I don't know what we're buying. I guess we don't have to go too deep into depth, but heading into 2023, what's some of your thoughts, maybe philosophy, really quick, the nutshell, the elevator pitch version, and some companies you guys are looking at.
Well, I'll start.
Darth.
I'm going to go with Intel. I really think that's going to be the dividend stock of the year. Of course, this is not financial advice, but these guys are way down. There's a lot of opportunities in the future with the microchips, and they're going to be building a facility in, as we discussed before, in Columbus, Ohio. And these guys are a 5% dividend yield, and they're definitely a steal right now. So I'm going to be buying them tomorrow.
Nice,
man.
You want to go, Ryan?
Yeah. So I don't want to spoil it quite yet because I'm going to make a video on it next weekend. But I did just add a new position to my portfolio last week to close out the year. I'm definitely going to be loading up more on that stock, and I'll tell you guys what it is after we cut the live off. But outside of that, I'm with Darth. Like, I'll probably continue to add some more Intel, at least get it up to 100 shares in my portfolio, and some of the other ones that I've been buying, like KRC, I'll probably continue adding to that, and Lowe's. I'd love to see Lowe's get back under $200 per share and load up on that bad boy. So
it is, isn't it?
Is it?
I think Lowe's is.
It might have dropped under $200 on Friday. I have not looked, to be honest with you.
It's $199.24 currently.
Okay. Yeah.
Yeah, I thought I had seen it as low. Yeah, I was going to show real quick. You guys are both talking about Intel, so just real quick on Alpha Spread, give everybody watching a little bit of their intrinsic value. Someday I'll get quicker at this. There we go. So that's interesting that they have an intrinsic value. This is 5 years out that Alpha Spread uses. So they have their like boilerplate calculations that they use, and 32.73. So currently 19% undervalued. And if you look at a worst case, they give it an intrinsic value of $20. And that's interesting. Real quick, I don't know. Do you guys know if anybody's buying or selling inside? I
was just going to say, Caitlin's right. The market is closed tomorrow. So
that's right.
That's one thing I probably should have reiterated that.
So
like some nice
everyone,
insider buys.
Yeah, look at that. That is interesting. So insiders keep buying. Look at Pat Gelsinger bought 248,000 worth. Then that was in May. Let's see where it was. So he actually bought also in August 501,000, and I don't know who. Let's see. They don't tell their. Yeah, so I don't know who Lip Bhutan is. That's interesting. Sounds like a. And look, Pat Gelsinger also bought on Halloween. Dude, he has been. Now that's interesting. I hadn't realized that Pat Gelsinger is doing so much buying, and I don't know if anybody knows. KC would probably know if those were some kind of stock option grants or something like that. That might have, he might have been able to option. But, dude, that is really solid to see. And I guess I'll springboard off of Intel, and I put it on the live stream yesterday at the beginning how I'm kind of changing, and with that circle of competence is that. I was talking to these guys about it, that I think I'm betting on Pat Gelsinger. I really like Pat Gelsinger, and I don't think I know what makes Intel's tech superior to other companies. Like I can explain, like I've been using Target and Walmart. I can explain the good, the bad, the ugly about the product that we interact with and that we use. But like there's this chip that's inside of this laptop I'm using. Dude, I don't know anything about it. Like, and you can learn, but I don't know. I guess the point is that saying I feel like Intel's kind of out of my circle of competence, and that's something I'm really going to push into in 2023 is just trying to invest in those businesses that I do think are inside that circle.
Yeah, I'm kind of with you. That was one of the, I mean, outside of Intel, I'm trying not to look at any companies that are of that complexity. And so I'm kind of trying to take a step back and I really cut down on some of the stocks on my watch list. And now it's very easy to understand things like Rollins, pest control company. That's pretty straightforward. Kroger, okay, grocery retailer, also very straightforward. And then Tyson Foods. Those are the 3 stocks that I'm looking at. All very simple in nature, I think. And, I think I kind of want to simplify things and look at more companies like that versus, and there's just so many tech stocks and different semiconductor companies that people want to buy. And I don't know, I'm kind of with you, but Intel, I'm already in it, and I'm making an effort to learn more specifically about Intel and this space just because I hold it. But I don't want to spend a lot of time like trying to learn all these new different industries. I'd rather, at least for now, use that time and energy and just better understand analyzing companies in general, kind of the basic stuff, if that makes sense.
Here, man. Agreed. Let me grab a few of these comments. I didn't say my stocks. Well, I will say this. He's talking about high yield REITs being attractive. I think many REITs have higher yields. I know Prologis is one that's really interesting to me. That's something, talk about circle of competence. We're actually subcontractors for Prologis here in the Chicagoland area. I think they're pushing 400 industrial buildings in the Chicagoland metropolitan area, which is, it's crazy. It's a lot. So they hire a bunch of different companies to fix their equipment, and we get tagged with that privilege sometimes. So I've been to plenty of Prologis buildings. They keep up on their equipment. So that's something within my circle of competence, is that in my sector, I see property managers that they let their buildings go to crap and they don't put in the work that should be done. We're actually dealing with a smaller firm, and they have some equipment that clearly needs to be replaced because they have tenants moving in. And they're just telling us like, all right, what's the cheapest thing you can do to make this passable and usable? And it's like, dude, it needs to be replaced. Like this door needs to be replaced. Like, it's like, well, what can be done so we don't have to replace it? Where Prologis is just like, boop, new door, done. Let's get it done. Yeah, and I think right there, like that's a circle of competence thing where I know that Prologis has a higher end, I don't know if I'd say product, but just a, probably because of their size, they keep their properties looking a lot nicer, which I think is a lot more attractive to tenants. So that's something. So REITs, I just sold Simon Property Group on the 31st in the taxable, because on Tuesday I'm going to be rebuying it inside of the Roth for those tax advantages. So that was the very last unqualified dividend company that was in my taxable account that we're moving on over to the Roth IRA. You guys like your Roths, don't you?
I have a traditional.
Oh, do you? I thought you had a Roth too. Okay. Still tax advantage.
Yeah.
Darth, how many different portfolios do you have? You've got kind of a small handful, don't you?
Yeah, I have an E-Trade one. I have an M1 Finance one. And I'm probably going to have a Webull one shortly. But definitely I like focusing on fractional shares with certain stocks like Starbucks and Tyson Foods, and having those high yield dividend stocks, high yield REITs, getting enough shares so that I can start buying, shares of Starbucks. So if you have enough dividend income from those guys, hopefully the distribution will focus on the the high dividend growth stocks like Starbucks and Tyson Foods and Prudential and JP Morgan and all them. So that's kind of my strategy. I don't know. And I probably need to invest in Johnson & Johnson because I've been taking Tylenol like crazy with this fever that I'm dealing with.
Yeah, Darth has been under the weather. So, dude, he's a trooper coming on for this. Let's see. What do you guys? Do you have any opinions on this? Stocks that are in AI, also EV and autonomous robots.
I think it just goes back to what we were talking about a moment ago. That stuff's way over my head. And I understand, I understand just that's kind of where things seem to be headed for the future, but as far as which companies to invest in or what that's going to look like at this point, I have no idea. And I think that what it's going to look like today is going to change so quickly. It's just hard to keep up with. So,
Yeah, and just back to what I was saying, and this is why I think circle of competence is important. So I'm thinking about maybe also investing in Prologis just because like it's well within, and just from what I told you guys watching that I know and I can explain to you why Prologis is superior to a smaller property manager. I don't think I can explain why right now Intel's tech is better than AMD's tech. Does that make sense? Like I understand what they do as businesses,
Yeah.
but just the inside nuts and bolts, I don't have as good of a grasp, and I think that's yeah. So,
and I think that is one of, just for Intel specifically, I think that is one of their differentiators, just how they do business, because they're kind of double dipping onto both sides of the chip development, the designing and the manufacturing, which most companies like Nvidia and AMD only do the designing, and then TSM and Samsung only do the manufacturing. So, and you could look at that as a good thing or a bad thing for Intel. And I think we've talked about this before, where it's cool that they have that exposure to both things and are able to do both. But one could make the argument that because they're not focusing on just one, neither is going to be as good as the competitors because there's not a focus there, if that makes sense. So I don't know.
Good point.
And then,
but that's been the case for a long time too, and they've decided they've stuck around and still have grown their business throughout all of that. Despite what people have said about them losing market share, their financials still show growth. So, sorry, Darth, go ahead, man.
No, I was going to say some of these big companies, technology companies, don't be surprised if they acquire, some of the smaller companies with artificial intelligence and that's what they do. They suck them up, acquire them, and they run the show. So, that's probably what's going to happen in the future.
Yeah, good point. Good point. Hey, this is Cody, Citizen of the Year, fellow Chicagoan. Him and I chatted yesterday, so we got a video coming out next week. It'll be interesting. We're trying a bit of a new spin on a collaboration here. So, but anyway, he wants to know, is BlackRock a buy in 2023?
Yeah, I've never really looked into it, but big company, obviously.
They're BlackRock. That's all you have to say.
Yeah, I know a little bit about them. I believe they are one of the world's biggest. I don't remember if it's just REITs or property managers. I know they have just a massive amount of assets under management. And yeah, that's a company that would definitely be worth looking into. KC might know a good deal amount about them. Yeah, Happy New Year's, everybody. Let's see. Oh, here we go. Yeah, and this is the thing. Like if you don't understand something, boom, bots, the ETF, which is, I'm sure that's all the autonomous robots and all that stuff. I mean, just buy them all. Yeah, you're not going to do as well, but you're not going to get suckered into a story, at least. She wouldn't describe Buffett as conservative, just consistent. Yeah, him and Charlie say it, man. Just you have to be consistent. And you also don't need to be smart to do this stuff. So it's just consistence.
Consistency specifically for dividend investing is huge, right? Because like with every contribution, you're increasing your dividend income, which for a lot of investors, that's really what it's all about. It's much less about beating the market than it is about being able to pay your bills. And so as long as you just stay consistent and keep investing, you're going to get to your destination. You're going to get there. And so, but you can't get there if you don't contribute. That's just the way it is.
Yep.
Yeah. 100%, man. I love it. What's up, Jim? What's going on, man? He said 4 insider buys. Yeah, I think we saw that. Yeah, it was mostly Pat Gelsinger and somebody else that's an insider that I am not familiar with. Not at all. Here's a fun one, boys. What's the next hot scam in 2023 that'll be promoted? Strip club stocks.
Yeah, all the NFTs. All the rug pulls and NFTs. That's totally embarrassing what happened these past few years.
You're telling me, man, I still got money. I've got computer code locked up on Celsius. It's hey, you know what? I don't feel too bad because I still recognize that this stuff was risky. And even was it Isaac Newton? It was Isaac Newton that got caught up in that South Sea company bubble, right? The South Seas. thing back in the day. He lost a bunch of money in what was the Bitcoin of the day or the NFTs of the
I
day.
don't know. I remember him telling me about that when it happened, but it escapes me right now.
He texted me, but I deleted the text. Yeah,
Yeah,
so
he sent a carrier pigeon.
yeah, as far as hot scams, dude, I don't. That's the thing is that when the scam pops up, I guess I'm learning if it is too good to be true, it most likely is, or maybe it is. And I remember even wanting to get carried away because you'd see all these young people, like, dude, you just yield farm. They're like, you're getting 19% return. And I'm like, what? Like, how can this keep going on? Where's it coming from?
Right.
And yeah, I got sucked in a little bit, but like I said, I at least, and I wish I would have done this instead, but I remember telling my wife, like, all right, we're going to put this much money in, and I would not be surprised if I wake up tomorrow and it's completely gone, but it will be as if we just like had some crazy weekend in Vegas, that type of money. So at this point, I much rather would have had the crazy weekend in Vegas. It would have been a much better experience, I think.
Yeah, it would have.
Oh, Vegas. This guy out there. Uh, Buffett's the master. His shares are higher in a down market. Right. He repurchases his own shares. Well, and he only actually buys if they think that it's at a good price. And they want to buy shares. So his whole thing at Berkshire, right? It's weird. It's Berkshire, but they call it Berkshire when I hear them. So we'll just follow their lead. But yeah, at Berkshire, they I completely lost it because I'm goofing around. What was I going to say, guys?
Was it going to be about how they don't want their intrinsic value to be? They want their stock to trade kind of close to the intrinsic value.
Correct.
Yeah.
And he always says if they would only return money if they can not turn $1 into something more than $1. If they have no more options and they sit on cash for a few years, then they would maybe consider paying a dividend. But like he says, that's the only time companies should pay a dividend is if they have $1 and they're like, well, I don't think we can turn this dollar into more than $1. So we'll just give it back to the shareholders. Yeah. So,
in the Discord group, kind of on that topic, someone sent a video that was by Ben Felix. I don't know if you guys know his channel, but his video was the irrelevance of the dividend irrelevance theory. And in it, he kind of argued that, and we've seen this before, that he's not the only one to have said this, but basically said something along the lines of dividends inhibit a company's growth because they're giving that out to shareholders instead of holding on to that and reinvesting into the business and using it to grow the business. And just kind of made a blanket statement, to that effect. But it really comes down, like, you have to look at it on an individual basis. Every business is different, and every business is in different stages of their life, right? And so one that's more matured, kind of like you said, businesses just get to a point where there's no better use of that capital besides to buy back shares or to pay it out in the form of dividends. So It just depends.
Yeah. And if something can end, it will. And I like it. Yeah, Casey answered us. So yeah, Patty G's were vesting of restricted stock units of his executive comp package. That's interesting. Again, Warren and Charlie have a whole opinion on stock options as compensation. Like, they think it's robbing shareholder value. So they always want to be on the lookout for that. And I know Pat Gelsinger is does anyone know, is he one of, if not the highest paid CEO? I think he's one of the top paid CEOs. So
I don't know.
Yeah, somebody might know. Yeah, for an average of 33.86. And then I will say this. Yes, Cody, I do see those warehouses, and I've worked at a bunch of those off of I-55. That's the Stevenson Expressway, everybody, here in Chicago. We won't lay on the thick Chicago accent. You got to say.
I like this comment from Jim here.
Oh, yeah.
Go ahead.
Sorry.
I'm
just goofing. No, I'm just clowning. I'll just get it out. My wife's uncle says tree. He doesn't say 3. He says tree. So he really does. Investing in companies that have a local footprint. Interesting. Yeah. Well, now that I think of it, I don't know what are the advantages of investing in local for you. I mean, I know we can put our money into it, but maybe I'm missing that. What's he getting at, Jim?
He might be saying that people might be more willing to support a local company than or a company that seems more local over a big box chain like a Walmart or a Target. And there's some companies out there like actually Rollins and Kroger are good examples where they'll buy up these more regional local businesses. Like Rollins makes that part of their business structures. They'll acquire more local or at least regional pest control companies like Clark Pest Control, which is local in my hometown. They own that. Kroger's very similar. Here in Vegas, they own the chain of grocery stores called Smith's. In Southern California, Ralph's is the big grocery store chain. They own Ralph's. Up in Oregon, Fred Meyer is like one of the big grocery store chains in that region. So they own Fred Meyer as well, and they do this all across the country in addition to the Kroger line of grocers.
Yeah, I was going to add, I mean, just what he said. I mean, I invest in Key Corp. I mean, that's in Cleveland, Ohio. That's a pretty good dividend growth stock for a bank. I mean, the symbol is KEY. I like that one. And revenue-wise, they've done phenomenal. And gosh, they have a lot of branches too.
They got that big Key Corp building in downtown Cleveland we walked by. Yeah, we ate at a Taco Bell that was right across. So in downtown Cleveland, there's like a Civil War monument. You probably know, right, Darth?
I
don't know.
Yes,
maybe not. But there's a Taco Bell, like a Taco Bell cantina. We went there at like 5:00 on Saturday, and there was a bunch of young thugs inside the Taco Bell smoking weed openly. So I was like, "Is this a thing here?" And we didn't stay at that Taco Bell because it was unexpected, and we didn't feel safe. So I said, "Nope," and we left. But
I can say this. I know I'm old because I remember people used to smoke in McDonald's. That's when you know you're getting old.
Yeah, I remember people smoking on planes, which is nutty. There was a smoking section toward the back of the plane. Stupid, like it didn't matter. Yeah, so Warren always says, I'll tie in with this, that they will outperform the market when the market's down, but when the market has really big up years, they will not. That's just kind of the way that they're structured.
Hey, on that note, how did you guys do in 2022? Did you guys outperform the market overall?
Honestly, I didn't even look yet. I'm so just concerned or watching my patty. I didn't even look. Well, I guess I don't know. I could look while we're chatting.
So Russ, if you log into, you don't have to do it right now, but I was just saying, if you log into the Charles Schwab web app and go over to the portfolio performance page, they completely renovated it and made it super nice to look at. And it'll show you your total performance or your total return for any time period. It's very slick.
Well, keep talking. I'm doing that. Yeah, I don't. I love Schwab, and I haven't.
And I wouldn't put it on the screen because it shows like your account number and all that stuff. But you should check it out. It's cool.
When I'm doing recorded videos, I've done this because I can crop and edit out my account numbers and whatnot. But it says my rate of return from December. I'm seeing 2019 to 2022. So from December 28th of 19 to the 31st, I had 26.23%.
You can change the dates in there. And you can also, if on the bottom right of the screen, it'll compare your performance against the three major indices. You can break it down and check the box for annualized returns, and it'll show you your average return, your CAGR for those years.
I see that. Yeah. Actually, I can show this in a minute here. So say something else, guys. I'm trying to do this.
No,
Darth, did you outperform the market?
I haven't looked. I'm pretty sure last time I checked, I was doing pretty well against it. But again, I've been buying real estate stocks and financial sector stocks. Like I was saying on, I think it was your latest video that we did together, the three of us. And, it has not done well against the S&P. So I've been heavily investing into those type of stocks that are not doing well against the S&P and not rebounding. Intel's one of them. I mean, they're just taking a huge dip, and I'm just capitalizing on it. So probably the next year or so, I'm still going to go after a lot of those financial sector stocks and real estate stocks.
All right, so we can see this. Yeah, I got no
Nice,
account
Russ. That's
numbers on there.
awesome, man. That's great.
So from January 1st to the 31st, so 3.64%. And then, so what do? You click on?
So if you scroll down,
Oop.
if
There
you
we
scroll
go.
down to the rate of return, oh, okay, that just showed highlights.
That was the
certain
S&P
index.
500.
Got it. Yeah, nice, man. So that's cool. You were in the green for the year.
Yeah.
Yeah, 3.64%. Interesting.
I think
All right, I'm going to stop.
I think
sharing
I was
that
up.
before I-
I was up 0.3% in 2022. That was my return.
been
Yeah,
a
I think
crazy year.
I think a lot of it though helped me out because I have exposure to Exxon and Chevron, and I think those two really helped push things up.
Yeah, I think Chevron was up like 55-ish% in 2022, something like
Wow.
that.
Yeah, and then Steve had an interesting point about Prologis was that they only have 2.8%. Yeah, and I actually was looking at them, and I was surprised. I thought they had a bigger dividend growth on that. Did Prologis?
Oh, their dividend growth runs circles around Stag. That's what turns me off about Stag is their dividend growth rate is terrible. But Prologis runs circles around them. Portfolio
Interestingly,
wise, innovation wise. I mean, they do the same stuff as Stag, but Stag is just way behind Prologis when it comes to dividend growth.
Oh yeah. So you guys can see right there on the screen they cut it in the GFC, which is understandable, but 8% CAGR last 5 years isn't terrible, and yeah, it looks like they're getting ready for another increase here. Their next dividend announcement should be their increase, and their yield is currently 11% above the 5-year average. And yeah, while we're at it, I don't know, let's get an intrinsic value for if I can be so self-indulgent for just a moment, because why not? These are helping, and I don't know. What do you guys do? Do you use a lot of intrinsic values? I'm trying to get better than it and get better with it. Oh, look at that. So they only got them at $83, and then worst case 63. So looks like we might have some ways to go.
Go ahead. Sorry, man.
No, yeah, I'm just blabbing.
To answer your question, I've kind of been tooting around a little bit on Alpha Spread. I signed up this morning to be an affiliate for them, but I saw that.
Oh, you did.
I saw that there's an issue with the IBAN thing to connect your bank account for the affiliate payouts. Bank of America doesn't do it, so I don't think I'll be able to. I don't know. I don't think I'll be able to do it, but Alpha Spreads is a pretty solid platform. It looks like it's going to make intrinsic value super simple, but at the same time, I don't know if you have as much control on the inputs as you would if you just had like a spreadsheet or something like that.
No, you do. Since you bring it up, I'll share it real quick. I'll show you I haven't really played around with that too much yet, but
it looks to me like Alpha Spread can work pretty well in conjunction with Seeking Alpha. Like Seeking Alpha you can use for some things, and then you could follow up or dive even deeper using Alpha Spread.
Yeah, so I probably should have. So they have right here, the model settings. And I don't know, Casey will probably like a lot of this. They have different, you can do it via net income. I don't remember what FCFE is. Do you remember? I don't remember off the top of my head. But yeah, they have a few different inputs there. Change the discount rate. So as this one, the base case is showing 8.75%, 5 years, and terminal growth rate 0%. So that's obviously is just keeping on. And yeah, they have just a bunch of different. Yeah, so you can do that for the base, and then you can do your own worst. And I don't know, you can fudge with the numbers, and it'll show you the year by year 4 or 5 and the terminal. So it's pretty, and we're still going. So these are all just things I've never really played around with yet, but yeah, it's a really nice system. I mean, revenue growth, it'll show you the net margin. It'll go with the discount rate as we're coming down, to show you how much a dollar is worth more now than in the future, I believe is what that is saying. And yeah, so it's a really it's a really interesting site is Alpha Spread. And yeah, I do have the affiliate link below. I there's no discount for which is I talked to the creator Alex of it, and he's like, yeah, we're just if they you'll get 20% commission, but I think it would be better give people a 10% discount on their first year or something. You probably get more people in the door.
Yeah, I think you have to. I think if you're gonna have affiliates, I think you need to offer some sort of incentive to sign up through those affiliates.
There's Casey's point on AI to wrap up what we were talking about is that yeah, the AI industry, everyone's trying to make money there, and only a handful of operators are going to survive the stampede, rise to market leadership. Yeah, and that's the problem. Then you're trying to pick which one is going to be the leader, you know? Here we go. How about you guys? Any investments in biotechs?
I don't know yet.
I used to have an investment, and I think Russ, maybe you did too. I used to have an investment in CRISPR a couple years ago or a few years ago before I really got into investing.
I should, man. I remember thinking about buying them.
Am I tripping? Yeah.
No, I came close. I was looking at them, I think around like 150 a share. And I think last time I saw, I think they're in like the 30s now.
Yeah, dude. So a few years ago, this might have been 4 years ago,
40 bucks.
5 years ago even. So I heard Joe Rogan talking about them incessantly, episode after episode, and it sounded cool. And I saw that they were publicly traded. I knew nothing about stocks, guys. I bought it because I heard him talking about it. And I think I ended up buying it at about 70 to 80 bucks per share, and held it for a couple years, and it jumped up to over 200 bucks a share at one point. And so I was like, all right, I better get out of this. And luckily, got out of that position with a nice little profit. And that's my only experience with biotech.
Yeah, same here. Not much. I mean, it's risky, but yeah, interesting company. Hey, maybe Rogan was getting paid in some stock options or something, right?
Yeah,
maybe, man.
That, sir, is as good as money.
Yeah.
Yeah, she says, all right. Let's see who we got. John tells us, dividend paying, you often circles of competence. They're often consumer. Yep, I agree. Here we go. Thoughts on BlackRock. KC likes them under 600. Huge swing trade off them in 22, and they fell to 550 for no good reason. Sold at 7. Yeah, BlackRock's just one of those companies, man. I guess if it goes cheap enough, but then that's the problem. When everything else is cheap, I'm like, well, I want to buy all my stuff that's cheap too. But John Deere, yeah, that's going to be interesting in Caterpillar. I know that farmers are going to be using the, what do you call them? The harvesters, with AI, they have robots that are going to, I don't know, use all kinds of calculations to harvest, and people don't even have to drive them.
That's pretty cool.
Here we go. Casey's hot scam for 23 is the new wave of influencer ETFs. Black.
So the only one that I know
ETFs.
who's done that is Meet Kevin so far. Has there been any other influencers that have their own ETFs? I don't
know about this. I didn't know he has an ETF.
Yeah.
So what does he do? I know there's the SARK, and I think I saw Tesla Q, I think, is an ETF, right? It's basically I think a Tesla bankruptcy ETF or something like that. Kind of a funny thing. Yeah, it's goofy, but yeah, the SARK, which is the short ARK. So if you want to short everything Kathy Wood is invested in, you buy that. And it's done pretty well.
Probably have a hidden freedom ETF. Have Prospect, AGNC. Some of the yield traps that do a lot of dividend cuts. That'll be.
I was gonna say.
Ooh, yeah.
I was gonna say, Darth, we're like 40 minutes into the. I was getting worried because we're like 40 minutes into the stream and you haven't brought up Hidden Freedom yet.
I know.
Oh, here we go. This is a fun one. He says growth stocks still need to be part of your overall stock portfolio. Buying Google at 271. We have it up. Yeah,
but you know what? That's not to say that dividend stocks don't go up in share price. I mean, look at Chevron this year, for example. Yeah. Other stocks like Lowe's has been a good grower. Home Depot's been a good grower. I mean, Apple and Microsoft, technically are dividend stocks that pay a dividend, but there's a lot of growth attached to those bad boys too. So just because we don't have, or some of us don't have like tried and true growth stocks like Google or Tesla or what have you, doesn't mean we're missing out on share price appreciation.
Yeah,
I
I
love it.
mean, and the thing is, like, I'm buying high income stocks for my M1 Finance dividend portfolio so that I have enough money to start buying those stocks, the growth stocks. So, I mean, you can use that as a
Yeah.
strategy. A lot of people do that. They actually, use some of even the yield trap stocks like Prospect. I know some people that have a lot of shares in Prospects so that they can buy other dividend stocks. So, just depends on how you want to do it.
Yeah,
Hey, I want to
and
shout out real quick, Jason down there in Florida, man. I keep saying it, guys. If don't tip me. You don't have to tip me, please. But if you have that overwhelming, uncontrollable urge, and you're gonna blow up if you don't give me some money, it's okay. But seriously, man, thank you, and it's always appreciated and never expected. I really do.
yeah.
Thank you.
And then
Um,
Darth, just kind of adding to your point too, income and share price appreciation are really two sides of the same coin. It all adds up to your total return. And so really that's what we're after one way or another is total return. That's the big
yes.
picture. And this is where it in some instances can come down to a matter of preference. How do you want to allocate that total return? Do you want more of that to come from share price? Do you want more of that to come from income? That's going to vary investor to investor just based on preference, timeline,
Yeah.
and just general investing goals.
I actually just got a decent amount on Wednesday and Thursday. I received the Aries Capital dividends on Thursday and Main Street on Wednesday.
There you
And I
go.
rolled that right into, I bought one more share of Main and one more share of Aries Capital. I kind of want to get that going, just take those dividends and I'm reinvesting. I don't know. I still can't do fractionals. I don't know why. It's just for some reason, but I've already started buying more of them and then hoping then buying more income. Just keep that snowball going to see see what happens with that.
Hey Russ,
Yeah,
I feel
yeah.
a New Year's
So,
resolution coming on for you, man. Getting
what's
over your
up?
fear of fractional shares.
Yeah, what do they say? Like, you gotta face. I don't know. Face your fears. I don't know why it is, dude. I just don't like how it looks. So I just let the dividends collect, and like I said, then I cut it with new cash and I target reallocate. I probably should. It would be easier, but I don't know. I just don't like how they look. That's just my own
Hey
goofy
man, you make it work anyway.
idiosyncrasy.
You
That's
make
why
it
I
work
have
anyway.
half.
So
That's why I have two different portfolios. Like certain ones, I fractional shares. Like it blows up in my face sometimes. I'm like, I'm putting X amount of dollars this week. I'm like, I'm hoping I buy ARK, and then I'm like, no, I wasn't trying to buy NNN. So sometimes
Yeah,
the allocation is a pain in the butt.
yeah. I will say though, I do dabble. I am dabbling in fractionals because as you guys know, I started in March or May. I started a wedding account for my daughters because I don't know. I was listening to a podcast with somebody describing that even if it's for yourself or you may get married someday, like just start an account, just start putting money away for a wedding. So it's not much. We're doing $50 per daughter. I have two daughters, $50 a kid per month, so $100 goes into this account and I'm only investing into DIVO and SCHD. And with those, I am dripping. And the reason I did that is because I just didn't want one more thing to keep track of. So I just want to just put $100 in and then just get the fractionals and reinvest the dividends on those. And it's actually been growing pretty well. It's surprising how fast that's really been adding up.
well, dude,
Yeah,
SCHD is up. SCHD is up this year, I think, overall, isn't it?
They're a
Weren't they up
beast.
like weren't they
yeah.
up like just under 9%? I could have that wrong, but they were in the green in 2022. Let's look it up.
Let's see. Here's something about you, Darth. You indicated Intel. I invested a media chain recently. Yeah, Nexstar Media. And he's big on Cisco systems. No, Cisco SYY. Is it? No, Cisco Systems is CSCO, but
Yeah,
SYY is
Cisco
just
is the
Cisco.
food, the restaurant.
Yeah, it's just
Yeah,
Cisco Inc., I guess.
my
Hormel
my uncle
Tyson.
my uncle works for Cisco. So I was wrong, by the way. SCHD was down 6.5% in 2022. So
They're
I'm
still
tripping.
really good. I mean,
Yeah.
really. I mean, they're awesome.
Ah, Denver, Kroger owns King Supers. Never
Yeah.
heard of that.
So there's this YouTube channel. I think you guys would like it if you haven't heard of it already. There's a YouTube channel called Company Man, and what he
Yes.
does, you know this one. So Darth, in case you've not heard of this, basically he'll give really good background info on various companies like Coca-Cola. I watched one on Kroger actually, and a lot of it's just kind of origin stories. So how they came to be and how they got to where they're at today. And it's been a good way to learn about some of these companies I've been researching. There was a great one on Kroger.
Yeah,
I
he
shared
had
it in
a
the newsletter a couple weeks
he
back.
had
It
a
was
really
awesome.
good he had a really good one on Fry's. You guys remember Fry's Electronics?
Yes, man.
He did one. What happened to Fry's Electronics? So we have a weird story about we have a Fry's that was maybe like 2 miles away from us in Downers Grove, Illinois. And we used to love going in there with the kids. The kids like walking around, but then we went in there on a Sunday and half the store was like emptied. And we're asking people like, what's going on? Are you guys going out of business? And two different employees were like, no, the truck was late. We're late getting shipments. And we were both like, what? Like, there's like no computers. Like, the store, it was the most bizarre thing.
Jeez.
And then, sure enough, then like a month later, I'm driving by and I was like, the sign's gone. I'm like, I knew it. They lied to us. So
Dude,
it was
and
a weird thing.
Kroger also owns Fry's.
What?
Yeah, Kroger owns Fry's.
Fry's Electronics?
Well,
Wow.
so okay, Fry's
I'm con-
Electronics. It all came. It was all started by the Fry family or whatever. Like the dad started it, and then when he passed away, I think the sons took it over. I'm not going to get this completely straight, but it was owned by one family. They ended up selling it to Kroger, and somehow Fry's Electronics spun off from the grocery store because it's also a grocery store. They're very popular in Arizona.
Yeah. Yep.
And I don't know
Interesting.
the exact connection, but yeah, Kroger's owns the grocery store, and I think the electronics store went out of business.
So I just reading this about Lumen Tech. The new CEO is from AT&T, and she stated the company will be working on reducing the debt load. And then to tie into that comment, Casey said she almost spit out her coffee when reading AT&T exec talking about how to manage debt loads. I did a video about AT&T's debt, and on their website they show all of their debt. And I will say that it is spread out between now and 2097. So
You had a really good video, and I think that point that you
Wow.
made was something that a lot of people didn't think about.
yes, I mean, obviously, though, it's still money that has to be paid back, but it's not like all due right away. And I did show that if they were to just have like their base case of free cash flow, that they would be able to pay the debt that's coming due in the next 5 years. And it's spread. But yeah, right on their website, if you go to AT&T and then it's investors, and I think one of the tabs, it just says debt on it, something with debt. You click that and you get a PDF file of when all of their debt is due, and it's out till 2097. So yeah, but
AT&T was a sneaky stock this year. They were up. They were the second best performing position in my portfolio, right behind Chevron.
oh, I didn't know that. I mean, I know they had been doing better, but yeah, that's interesting. I don't know if we put that up. Smokers on Planes likes the changes Schwab is making. Yeah, I probably will spend some time tomorrow looking through it because I've been getting the emails that they've made changes and whatnot. But obviously, as we just saw, I hadn't really played around with it all that
I like
much.
it too, Joe. I think it's necessary. Like if they're going to keep up with these other platforms like M1 Finance and Robinhood, they need to update the interface and how easy it is to use their platform because it's been
Yes.
pretty wonky. Especially
Yes.
like the app, the mobile app's not too bad and it's getting better. The web app is needs some work. And I'd like
That
to see them
bad?
make those changes and
Yeah.
capture, yeah, it's that bad, and capture more
Ugh.
younger people who are just getting into the market instead of them going right to something like Robinhood or
And you know what you're just
M1's not bad, but Robinhood specifically.
you know what you're describing is the friction, right? I mean, the I don't know how to say it. The more frictionless that things are, the more people are going to use them. And that's one of my huge knocks on crypto. And I told you guys, I've been consolidating all of my crypto onto Coinbase and just parking it in Ethereum. So I'm probably going to liquidate that in the next couple of weeks. I'm hoping for a little spike so I can sell and then just put it all in the Roth. But that's one of the problems with crypto, other than buying on Coinbase, which is Coinbase is the most frictionless platform for crypto. But I know Fidelity is going to start allowing crypto on their platform soon. And I believe Schwab, I think there's a couple other big brokers that are going to start doing that. I think that's going to potentially hurt Coinbase going forward and their fees. But so like you said, dude, they need to make it more frictionless, but I guess that could be bad because that allows the easier trading, when you do like Robinhood did. I think we all like Stag. I invested in Stag. You do too, Darth, right?
I'm going to be rebuying them eventually, but they are a monthly dividend REIT, so that's the one thing that attracts me to them. I still think that Prologis is way better, but no, that's the only thing that I have going for Stag and buying them is I have a goal with dividend income with monthly dividends.
Yeah.
And I want to get to 100 shares eventually with those guys, see what happens. Maybe do options. That's one thing I need to do eventually is options.
It's funny you say that because I'm moving kind of the opposite direction from options. At least I showed you guys in that one video, dude, I did so much option selling and extra time in that. And literally, if I would have just bought Starbucks at 82 and just held it, I would be further ahead. Like that blows my mind. All the little moves I've made in sales. And, it's like Ian Lopik always said, the more you handle the soap, like the more it gets worn down. Like that's
true.
Good point, man. Yeah. Yeah. Tutomi doesn't like Stag, no dividend growth. Yeah. Let's see. What do we got here? Man, already headed toward the end.
Real quick, I see Mark, formerly known as Trading with the Dummy, in here.
Man, I missed him.
I've been curious what's going on with you and your channel. I mean, you've obviously made some changes, and I know you put something out about what's going on, but I got kind of lost, to be honest. Are you still making videos? Are you
what's up, Mark?
kind of done on YouTube? Where are you at with all of that?
Let's see. Yeah, I'd like to know that. What was I going to put up? Not that. Oh, here, the FCE, because I didn't know. And I love saying I don't know. It's just free cash flow to equity. That's right. The go-to model for businesses that run asset light on the operations side. Thank you, Casey, for that. And that's why we all have Google and now Chat GPT. I like to hear what she does. She uses the SEC filings to adjust the gap numbers. Won't get into that since we're getting toward the end. Let's see what he Mark's. Let's see. Oh, do you guys remember this, Eric Hall? Not to be confused with Cisco. You remember Cisco?
The artist?
Yeah.
Oh yeah.
The thong guy.
Yeah. Gosh, that was like high school years.
Do you guys remember?
That's when I first started dating my wife, I think.
Have you guys ever seen the SNL skits with Will Ferrell as Robert Goulet?
Yes.
I think so, yes.
Have you seen the one where, probably the coconut bangers ball? Do you know what I'm talking about?
No.
I like it when you call me Big Papa.
That's going to be my new ringtone for you.
You got to look it up. You got to look it up on somewhere on the internet. You can find it. But just search Robert Goulet coconut bangers ball, and it's so freaking funny. But he sings the thong song.
Who is T-Doc? I'm trying to remember who those guys
Teledoc.
are.
Dude, I invested in Teledoc back in the day. There's a podcast I used to listen to called Marathon Money. Shout out. I talked about them with Marcus when we had our chat. And they were big on Teledoc, and I had got in at like 80, and I think I quick scalped it to 90. I think I had like 5 shares. I made like $10 a share. This was way back in the day. And then of course they went up to almost like, I think $300 a share. And I think now they're at like $20 or $15 or something, but they're telehealth.
When you said it dropped down to $20, there's your answer.
Let me see what they are at today. 23.65. And I remember when they were up around 300. So that's just, they blew up during the pandemic. Just, oh my God. Here, answer your question. He's rebranding. Nice. I think that's a good point. I just talked to Cody about rebranding if he's still watching. Here we go. And more answers to us. You can buy crypto on Fidelity now. Eek. I'd be nervous if I was a Coinbase investor, and maybe that's why they're down so much. ETH and Bitcoin only, though. Thank you for sharing that, Ivan. Oh, and here you go, his new channel. Yeah, so sometimes, man, more content, not a newbie anymore. Yeah, man, you got to let people know what your channel's about. Ryan and I talk about that.
Yeah, Teledoc, I don't even think they distribute a dividend.
No, oh God, no. They're a new
I don't invest in a stock unless if it distributes a dividend. By the way, Amazon, what the heck? That I saw that they distributed a dividend.
Was a special dividend or something?
Harris sent me something about Amazon. That, but there wasn't anything else. Like he sent me a one article from MarketBeat or something like that. But
yeah,
that's the only place I've seen it, and I don't know if it's real. Like if it was real, there'd be articles on it.
That's
all over
true.
The place.
That's why I was asking you guys. I'm like, what do you think of that?
I'm not seeing anything. Yeah, one of the things about Simply Safe, they put the special dividends on there now for company profiles, and I don't see anything. Yeah, why did I invest in Teledoc? Well, I invested in Teledoc because I heard people talking about it, and it was new tech. It was a company that, like they said, this is the future. You don't have to go to the doctor anymore. You just turn on your computer and you can talk to your doctor through your computer. And
there's a lot. Yeah, there's a lot of those companies, though, with telehealth and stuff. I invested in it. Like I do a little bit of real estate crowdfunding. I'm sorry. And also like just crowdfunding and stuff. And I did invest in Circle Medical, which kind of did that. California, and they just got acquired by Well Health Technologies in Canada, so that's kind of exciting. But it's just a risk. I mean, there's so many sharks, in the ocean. It's very competitive. That's just one of those things that everybody's trying to do that now, and there's only going to be one or two that stand strong. So
I have a question for you. Invest in Fundrise, right?
Yeah.
How is it getting your money out? Because I was kind of on the crypto side of that with Lofty, which is the same thing. It's tokenized real estate. They take apartment buildings, break it up, ownership up into, 12,000 tokens. Each token costs $50 or whatever, how many ever tokens. But it felt kind of gated, like it wasn't as liquid because I had to resell my tokens on the secondary market. And I really wanted to get out because you also get a K1 with that. But I ended up taking a wash. I mean, I got rental income, but after everything, it's a wash. But it took me a good 3 weeks to sell all my holdings, where I feel like at least with a REIT, like, dude, you can just like right away. If you need the money, you're going to sell, no problem, like that day. So how is it with Fundrise? Because I honestly don't know. Is there kind of a gated component to getting your money out?
I think you have within X amount of years to pull it out, and you can correct me if I'm wrong, like X amount of years. So say like if you wait a year, you get more money taken out for taking money out. It's supposed to be a long-term thing, and really these guys haven't been tested yet. I mean, this is still all preliminary. I really can't answer that. It's, I mean, just by the way in the structure, I mean, I did lose some money with appreciation this year, apparently. Yeah. So, they're not invincible like everybody thought. So my biggest advice is just don't put all your eggs in one basket.
And if you do, watch that basket. So,
yeah.
But dude, there you go. There's a video topic for you as a Fundrise investor. You could do Fundrise versus REIT investing, which is better. Boom.
Well, I think private REITs, I mean, it's good to be diversified in public and private REITs. I really have no complaints about Fundrise, though. I really I'm busy. I can't do my own real estate, so I invest in Fundrise with private real estate.
That's how I feel. I love it. Jim he has shares of Berkshire just to get tickets to the Berkshire shareholders meeting in May. Hey, that's a good one, man. A lot of people do. Although I hear sometimes they say that there's lots of passes floating around that people can't use, so it's easy to get in. And yeah, I guess we'll quick wrap it up here. We're already
Ooh,
through
I'm
this an hour.
sweating. Yeah,
Yeah,
and I'm like winging it with this video, with this fever.
yeah, we'll we'll wrap it up and
No, I'm all right.
yeah. So I don't know. What do you guys want to say? Anything? I guess we kind of talked a little bit about some stuff we're doing, some thoughts.
So funny enough, Ari, I don't know if you guys saw this. He texted us 5 minutes ago saying he's going to be on at 5.
We should bring him on and say, all right, everybody, that's the show. Yeah, I
Yeah.
didn't see the text.
We're doing skits with like Jimmy Kimmel and Matt Damon.
Oh,
He
who,
comes
Ari?
on. Oh, I'm sorry, we're gonna cut you off short.
Oh yeah.
Yeah, I didn't see it. I'm the lunatic, dude. I'm so paranoid. I have to have the stream on my phone next to me because I'm always worried I'm going to be streaming and something cuts off and I'm not connected anymore. That's my old man thing. Let's see. I'll just throw Dan's comment up on here and then maybe we'll bug on out. For 2023, he's looking for dividend companies that have been hurt by interest rate increases. Finance, housing. I think Dan's an accountant, right? If I remember right. See who was unfairly hit by. Yeah, you could, man. Here we go. I think this is Western Union. I don't think I know they're a high yield, but honestly, I can't imagine them being around for much longer unless there's something I'm missing, you know?
I agree, and I've been excuse me, I've been asked this before, or been asked about this talk before, and just taking a quick scroll through their financials, if I remember correctly, their revenue has been on a pretty steady decline across the last 10 years. These days, you just for what they do, there's so many other platforms that do the same thing. One advantage that they might have is like international payment transfers, whatever, or money transfers. I don't know. I don't know how that works with Venmo and Cash App and PayPal and stuff like that. I would imagine it's just as easy. So I just don't really see what advantage Western Union has anymore. Having said that, though, they've been a very iconic company. Like they've been around since the 1800s, back when like telegraphs were big, because that's kind of what they started out doing. I think is telegraphs and telegrams. So
yeah, they worry me. They have a 6.83% yield. Here, I'm going to show you guys one thing, and then we'll get out of here. One thing I've noticed with companies that get ready to cut their dividend that I have seen in the past that I'm kind of seeing here with Western Union.
What's their payout ratio?
So this here payout ratio is not earnings 61%, free cash flow only 53%. Here, but like Ryan said, I was just looking, their total sales, it was at 5.6 billion in 2012, 4.6 billion now. So it's been just slowly eroding. Maybe they are that proverbial melting ice cube.
Yeah, it's a turnoff.
Yeah, so it looks like they had some pretty decent dividend growth, but dude, they haven't raised that dividend, so it's pretty stagnant. It looks like it's frozen right now. And this is one of the things I've noticed before companies cut their dividend, is not saying they will, but this is something I would notice right here and keep an eye on, that is when they don't raise it and they have that dividend frozen. But I'm with Ryan, man. But I've honestly never really tore into the company either. So
yeah, I mean, I look at things pretty basic. If they're not increasing the revenue, same with REITs. I mean, usually if REITs increase their revenue, usually they hike their dividend. That's kind of the rule of thumb. So that would not have my confidence in buying a stock like that. I mean, look at Key Corp. I mean, a lot of the bank stocks I buy, the revenue is going up. So usually the board of directors feel confident to raise a dividend or have a dividend hike. So there's not a lot of confidence in hiking the dividend because the revenue is terrible.
Do you do a lot of sword play, Darth? Look at this guy. Because they told you to fell better, Darth. So
what's going on, Ari?
Better late than never.
What's up, Ari?
All right, guys. How are you guys doing?
Happy New Year, man.
I'm all right.
Happy New Year to you three and everybody else out there.
Yeah.
Man, what you been doing today, my dude? I guess tonight over in your neck of the woods, actually.
Out and about. I was at work. It's in Israel. The work week starts on Sunday, so I was at work, and then I was studying with a fellow of mine some Torah. Now here we are, some dividends.
Very nice.
Nice. Yeah, so we were just talking. The Tudomi wants Darth to sword play better. He wants to see him fell better. So I like that. And and then Lucas says, "What were the 1800s like?" You don't want to get an STD. That's all I'm going to say. And yeah,
or smallpox. You don't want smallpox either.
Yeah.
Yeah, gonorrhea in 1877 was no joke, man. All right. Yeah, I'll stay on with it for a few more minutes.
It's
more
not
minutes
much
for you,
better in
Ari,
2023, Russ.
Let me get Ari. What's your strategy? What's a couple stocks you're looking at heading into this year? And we kind of established like you can't say like what you're going to buy now for the rest of 2023 because dude, anything can happen. But what are you looking at? What's your strategy? What's your thoughts? What are you thinking?
You want to start with strategy or what am I looking? I feel like those are two
Whatever.
different. Well, I'll go with strategy, I guess, at first. I think we're in for a special treat in 2023. About 6 months into the year, what I foresee happening is a deep recession, and so I think we're entering 2023 ebbing and flowing our way into the new year. I think something that's pretty persistent at the end of a month, we get these little rallies and it's excitement. The old month is behind us, a new month is in front of us. And I think on a larger scale that happens at the end of the year. This year, of course, we didn't have that Santa Claus rally, but I actually, depending on the jobs report on Friday, the Fed minutes on Tuesday, I think we could see some green this week. And I'm really worried actually for the first earnings season of 2023. And then just moving into the remainder of 2023, because as I shared, I think a deep recession might be on the way. But I think, as we always know, that just presents crazy buying opportunities for all of us.
Yep.
So I'm looking actually, and I actually started buying into Apple here and there, nitpicking. I bought 5 shares last week, 131 and something change, and I bought another 5 shares, and it dipped to 126. And so I have my eyes on Apple. I'm really trying to make it 20% of my portfolio.
Wow.
And
yeah.
Stanley Black & Decker is another play of mine that I'd really like to increase the position with. Some bank stocks, JP Morgan Chase, Bank of America. And then I actually have Google. That's not a dividend stock, but I'm very excited about Google. So I've been nitpicking at Google. I like it where it's at right now. I think it could get hit a little harder. And I'm not going to keep it, in my portfolio. I really plan to profit from it and then sell out and double down on my dividend stocks.
Hey, here's a question, Ari, real quick. Casey wants to know if you see a deep recession in 2023, shouldn't you be moving to cash or in cash? What do you think about that?
It's a great question. I do have a lot of cash on the sideline right now. I have about $25,000 to $30,000 just on the sideline, and I'm still dollar cost averaging in right now. In terms of anything I buy, once I buy, that money is gone. I mean, that's like the company's money at this point.
Yeah,
nice,
it's
man.
like you still want to and you could be wrong, and either way, you still want to put that cash to work, whatever happens in the market,
Yeah. Look, I think I told some of you guys, I got a crazy plan ahead of me. In about 7 to 8 months, I'm going to move to Bali. So
yeah.
I'm keeping that kind of front and center as well. And I have some of the passive streams from dividend investing, from a financial course that I got out there. And, we'll see. But I'm risking big because I think, it's worth it at the end of the day. And you can live pretty cheaply out in Bali. So, I foresee a lot of big things coming in 2023.
Well, dude, you could make the argument that you're lowering your risk, right? Just by lowering your expenses, that dramatically lowers your risk.
Sure.
Especially doing something like creating content like you do.
Ryan, I'm following in your footsteps, man.
Which definitely has its ebbs and flows, but so I'd say you're lowering your risk, man. Like why not? Move to paradise and live for pennies on the dollar.
Have you been to Bali before?
Never been. My
Really?
girlfriend,
Wow.
she's been. I actually wanted to go to Thailand at first. That's where I was thinking, and then I met her, and then she was like, Bali's way better, so we're gonna go there. All right,
There you go.
I'm going to
How
Bali.
about this, Ari? I'll make you a deal. Let's just move to Mexico and plant some agave and start making some tequila.
To join you on the dividend happy hours.
Yeah, exactly, man.
Oh, Mexico. Yeah. So
The way I see it, man, is we should all just quit our jobs, man, and just go full force YouTube and dividend investing. What do you
That
guys
would be
say? I know
nice.
Ron's already way ahead of all of us.
Dude, it
well-
almost feels like being semi-retired. And like I said, it's ebbs and flows. Like there's a certain amount of risk. There's definitely some risk that comes to doing this, but it's cool, man. It's
little different for me when I got a mortgage and 2 teenage daughters and a wife that I'm providing for, and right now YouTube's not going to cover that. So I'd like to. That'd be nice to try. That'd be a
Yeah.
hell of a leap of faith for me.
I mean, YouTube's helping pay for my graduate school, so I can't complain. And with travel nursing now, that's going to be tough to compete with, having a YouTube channel and revenue and stuff. So if I can get that type of revenue that I'm doing travel nursing, that would be amazing. But right now, I just need to focus on, the final goal is graduate nurse practitioner school in August. And deal
that's the
You
cool
have that
thing.
much time left.
well, let's just take one day at a time.
There you go.
Yeah.
And that's the cool thing about doing this YouTube thing. And oftentimes, like when I talk to, like Russ, when I talk to you or whatever, I forget that everyone has different goals with their channel. Like not everyone does this to do it full time. Like, which is totally fine. And it's the same thing with investing in general. People have different goals, and that we can go back to share price appreciation versus dividend income, and talk more about that or plug that into this conversation. But yeah, everyone's got different goals with their channels, and but it can be or at the very least it can be a way to make some passive income. And it's such a
Maybe
cool thing.
I missed it already. What did you guys bring in total end of 2022 dividend income?
Oh, we
I didn't
didn't
add mine
talk
up.
about that. That's a
We
good
didn't talk
question.
about it. We should talk about it.
Yeah. Russ, why don't you kick it off, man?
How much total? Well, I think I still got this up. My performance was 3.64%, but dividend income complete, as it's loading here, was $4,627 across a total, I guess, 4 portfolios. So yeah, almost pushing 5K. Not bad.
That's awesome, man. So how much did you bring in 2021? Like, what was the jump year over year?
Oh, criminy. In 2022, I don't know how to do this yet, Ryan.
Come on, Russ.
I'm
I'm not even
Yeah, I
ready
don't-
to
I don't
start
have
adding
it
up
loaded up.
mine yet. I don't feel good enough yet until I have enough shares to start saying how much revenue I have.
I think in total, Ari, I brought in between my Roth and my Charles Schwab about $1,750.
That's
And
good.
in 2021, it was about 940, somewhere in there. So jumped about $800 year over year, which is sweet. And the cool thing is, I know by this time next year, it'll be over $2,400 or $200 a month, which I think is like
Nice.
That's super cool.
That's amazing. No, it's
I'm
great. I
ready,
just started today, actually, earlier at work. I was sitting on my desk and I was doing my totals, but I brought in around 350 for the month of December, and I got to go back and actually add up. But I think I'm looking at roughly around 1650 right now for
Pretty
2022.
good.
That's
I'm
awesome.
trying to see what
man.
I got. I think I wrote it down somewhere, like 500 something this past month. I just did a video on it.
Darth, did you write it with your
I
quill?
do so many videos, like I forget like which one I did. But
Yeah, this month was 510. 510 for me.
Dang, man.
Wow.
yeah, I'm getting
That's
there.
legit.
But I don't know. I just I really haven't added up all my income yet until I like feel consistent making 600, 700 a month, and then I'll start adding everything up. So I'm starting to get to that point. So I'm pretty excited.
Yeah.
When it
Yeah.
comes to videos and content, I mean, I watch all of Darth's videos, And I'm like, this guy's got to be pulling in like thousands of dollars. The amount of content you make per week. I'm like, how many positions? How much does he got going in there? I'm excited to get the big reveal once you finally tally up.
Yeah, I just haven't done it. I'll probably do it this year at the end of 2023. It's one of those things like you're not I just have a Michael Jordan mentality, like I'm not satisfied. So I've always had that mentality. So I'll probably do it at the end of this year and do my total dividend income. I just don't think it's like I'm not ready to start revealing those numbers yet.
Yeah. It makes sense. That was like last year for me. It was like you start off with such a small snowball. And I'm like, is it worth making a video about like I brought in $20 like my first month, you know?
Yeah.
But it's been exciting just watching the dividend snowball roll. Like that's when I look, now I'm like, wow, like this really, it just works.
Yeah.
It's real. It's a real thing.
Yeah.
And that's what we were
Straightforward.
talking about. That's what we were talking about earlier in the stream. Is with this style of investing, obviously consistency is a huge component to being successful with it. But man, if you do that, it's like success is inevitable. It really just comes down for us normal people don't have a lot of money. You have to make it consistent. You can't. It's so much harder to do these lump sum big investments every once in a while because we just don't have money like that. So you got to put it in every week, every month, whatever. But if you do that, it's like you said, Ari, that dividend snowball, man. It's going to grow, and in a lot of cases, it's going to grow quicker than you anticipate.
So Ari, have you been buying any Medtronic?
I haven't actually. In terms of healthcare stocks, I've been really adamant about Johnson and Johnson.
Nice.
And I want to get Johnson and Johnson up to 100 total shares plus, but it's not at all near a buy-in price for me. So I'm like, do I buy, Medtronic? Do I hold back? And I think I've shared with you guys before. It's like I'm really trying to trim my portfolio down. I have 29 positions in there now. I actually trimmed down a couple weeks ago, but then I ended up buying some Amazon and I bought some Google. So I went back up, and 2023 for me is really going to be all about selectivity, trimming, and growing, what I think are quality positions. And so Johnson & Johnson is really one I want to get above 100 total.
That's a good goal.
What do you think about Medtronic, Darth?
I've posted numerous videos on them. I don't own them currently, but pacemakers and defibrillators, they're huge. And I can tell you as a cardiac step-down nurse, I mean, I can go up to patients and interrogate their pacemaker, and it's either Boston Scientific or is it Medtronic? That's the first thing you ask them. So people are getting sicker, they're getting older. So if you have a low ejection fraction, usually you need a dual, pacemaker. You can correct me if I'm wrong. I mean, but medical terms
sounds right to me.
Yeah, you got me.
But usually, those type of things. They also have pumps and stuff that are very important too for people. So a lot of cardiac, and unfortunately, the obesity rate across the world, mostly in the United States, is getting terrible. So Medtronic's going to be high in demand as a company.
And that's the thing too. I think that there's also some safety in investing in a medical device company as opposed to biopharma because of that pipeline. Like that's a huge thing, as with AbbVie and Humira, that patent expiring. I think the number I read, and I should have verified it, I think it's at least 30% they expect their revenue to be cut down because of all the biosimilars that are going to be able to just start pumping out their own Humira versions with that patent cliff that's hitting them. And I know it's also coming for Merck with Keytruda. And, it's funny, we learn all these things. And I don't know the pipeline so deep enough to confidently buy one or the other. And that's just something that you got to learn. So,
Russ,
yeah.
I think that could be mitigated if you just sampled their pipeline, just so you really know the effects of all the pharmaceuticals.
Yeah.
So just something to keep in mind in the future.
Suppositories are popular around here.
On the dividend happy hour specifically.
Yeah, well, some of those you might need a couple shots tequila before you.
I tell you what, Pfizer's one that I'm going to be buying as well. So, and Ari, I mean, in Israel, man, they're all about Pfizer with research with that COVID and stuff. They're crazy with that. And
Yeah.
Paxlovid's antiviral medication for COVID now. So I mean, they have some medications out there. They're already trying to fight an arms race with other companies with not just the mRNA vaccine for COVID, but also for RSV and influenza. So that's going to be a very interesting arms race for the next vaccine. And
So what are you seeing now in the hospitals with COVID? Is it spiking again here? I know, China's reopening, and so I feel like that was only natural for them to be hit with large spikes. But what about in the US? Are you seeing it spiking?
I mean, patients wise in the hospital, it's not as bad. I
Yeah.
mean, I do believe that natural immunity is a part of it. So everybody's been exposed. I got COVID twice this past year, probably from the Omicron variant. I got it in early February and I got it in September. And I honestly, influenza and RSV are pretty nasty right now in the hospital. Influenza A. So, but the problem is, I mean, with like I go back to the obesity rate. I mean, those people are affected the most because of the inflammatory process, and everybody talks about the cytokine storm, but people who are obese, they can generate cytokines a little bit more compared to healthier people. So that's part of the inflammatory process. So I was like looking in pathophysiology in 2020 in the fall. I'm like, oh my gosh, this makes perfect sense why these people get this, versus other people. So it's very interesting. I mean, the biggest learning lesson is take care of yourself. I mean, take care of your health. I mean, that's the biggest learning lesson because, if you get obese or you're on insulin, you can't put any money into your dividend stocks. Put money into insulin or, blood pressure pills or those type of things.
Yeah.
Dude, I love that, man. And if you check out early, you're not going to be able to enjoy the fruits of your labor as long
Yeah.
as you can either. I mean, yeah,
And I mean,
I
some
love
people,
it.
it's very unfortunate. They have heart conditions, they need cardiac ablations when they're really young or infants. But when there's a strong correlation, you don't take care of yourself, that's what happens. And that's why Medtronic's in demand. And again, this is not financial advice, as we're all saying on here, but there's a correlation with unhealthy people and why these pharmaceutical companies and medical companies are doing so well because people are getting sicker and not taking care of themselves.
I think
You know,
Roche isn't Roche one of the big, or who's the big one that is in diabetes? I think they're a foreign company.
No,
I think it might have
I'm
been Roche.
not sure.
Hey
Yeah,
fellas,
I
I
will say my father worked for Johnson and Johnson for quite some time, and I always remember, when I was a kid and I would ask about investing. He was like, invest into healthcare. Just it's always a necessity. With Johnson and Johnson, of course, consumer goods. They also have medical devices, pharmaceuticals, but even just Medtronic in and of itself. I bought Medtronic in 2020, March of 2020, and I just held, and I've enjoyed the dividend since. And I like it now. I think it's still in the 70s, right? It's a higher 70, right? 77, I think, dollars per share. But I thought about buying more. I got this thing with J&J. I'm like,
I
I'll wait. It's a good healthcare play for me. Trim the portfolio, but I think when the supply chains really resolve, I think Medtronic's going to run. And this is why they've been hurting. Ultimately, at the end of the day, they've been struggling for the last 2 years.
Ryan, were you going to say something? I totally
Yeah, I was just gonna say I need to probably hop off in about
Okay.
5 minutes or so. That's all. I
Yeah,
got
well,
to say.
we went a little long here, so
Well, Ari, I mentioned earlier that I do have a fever right now, and I've been
Yep.
taking a lot of Tylenol, which Johnson and Johnson makes. So that's the big thing. And they really try to emphasize Tylenol versus non-steroid anti-inflammatories with people because non-steroid anti-inflammatories could put stress in the kidneys. So people try to usually give Tylenol first, and then go somewhere else with that route. And there's always a risk of a GI bleed too, taking non-steroid anti-inflammatories as well. So that product is pretty strong for Johnson and Johnson.
Oh
hey
yeah,
Ryan, what do you think about that comment up there?
I don't know what it means.
Yeah, L3 Harris acquired Rocketdyne, I think is what that is.
What's L3? What is L3 Harris?
They're a military company. They do a lot of kind of like a Lockheed Martin, a Raytheon. They do space. They put on the James Webb Space Telescope. They have components that they built for it. Interesting company. I did a video on them way back in the day. But yeah, somebody wanted to know if you were going to invest in military. I saw that. I thought that was interesting because you sold Lockheed Martin, man.
Yeah,
Recently?
What's that?
You sold it recently?
Mm-hmm. Like I sold it sometime in December. Locked in a nice 40% profit, I think.
Yeah.
And just kind of going back to the circle of competence thing earlier, I might stay out of that industry for a while, not because it's not a necessary one to, not because I don't think it's a good one to be in. I just, I don't know. I think there's other things I'd probably understand better and more familiar with that I'd rather give a shot. Like kind of the stuff I was mentioning earlier, maybe like the Krogers or the Rollins, or even this mystery stock that I added to my portfolio. I nothing against Lockheed Martin. Like I thought it was a good company, but I was happy to lock in a profit on that, and probably will stay out of the industry at least for now. I don't know. I
will say on a good and bad note, 99% of Lockheed's revenue is government contracts, so that could be dangerous. Then you're playing the game if you get a party in there that wants to cut defense spending. But on the other hand, as far as recessions go, I mean, if 99% of your revenue is guaranteed by government contract, that money's coming in. So, and I also like to view the Lockheed dividends I receive as a form of a tax return too. So,
and also just as far as the industrial sector, I really like the industrial sector. And I think just within that sector, there's so many different ways to diversify because there's so many different industries within industrials. And so, upon selling out of Lockheed Martin, I've kind of just been exploring some of the other industries within there. And I also have some pretty decent exposure to the sector as a whole still without Lockheed Martin. Snap-on, 3M, there's one more in my portfolio that I think I have. But if not, and then two's like that's fine by me for now. Then I'm looking at Rollins, which would make a third if I end up buying it. But I think there's some other really cool companies and industries to check out in that sector. So
yeah, and when it comes to military too, I mean, Ari, in Israel, you got to have the best defense because I mean, you guys are surrounded by countries that
We're in a fun neighborhood.
very hostile. So I mean, people in Israel are very tough people, and those are people you don't want to mess around with when it comes to war because they will run circles around you in 5 seconds.
So here, maybe we'll wrap it up with this. If we can get your guys, because I like J&J, and this is a company that, if a lot of you don't know that are watching, at the end of the year, they're splitting into two companies. They're going to be Johnson and Johnson, I guess, but just one Johnson. So yeah, the medical device and the pharmaceuticals are going to be one company, and then the consumer health is going to be a separate company. And I've said sometimes it unlocks value because people would rather invest in the consumer health because they know it and they understand it, and they might not know and understand the biopharma and the medical device. So people can pick and choose, and it could unlock value. And I think they're going to pay a dividend that'll probably combine to about what it is now. But yeah, that's something interesting that's going to be happening at the end of the year. Is it going to split into two? But as of right now, like you said, you're buying J&J. Are you just comfortable with where they are? Or do you have a price target in mind?
So I'm not buying right now, but I'm watching it. It's a great look. I think it probably won't be on sale for me for the foreseeable future, although I'd like it to be because it is a nice recessionary stock that people tend to flock to during a recession or volatile times. I'd really like to see it come down to the low 170s, 165, 170 range.
Yeah, I think it's 173 right now. That's where it's
right
at.
now.
I'd love to see 150s, 140s, 150s. That's where I'd really, really like to see, and I'd probably be buying hard there.
Yeah.
I'm gonna walk.
I bought some in December. Picked up about 9 after I sold Lockheed Martin. I reinvested some of that into Johnson & Johnson.
What do you guys think? Are you gonna hold both the companies, or are you gonna sell either of them? I'm sorry, Ari. What was that?
I'd begin dollar cost averaging my way back in there, 165, around there.
Yeah.
And when I say
Well,
one or two shares here or there sprinkle in, because this is a 40-year stock for me. Like,
yeah.
really just going to keep adding, nitpicking.
So what do you guys think? Actually, John's question here as I'm answering this. Yeah, it's not a stock split like that. It's just right. I think it's just two
Just a
companies.
spin-off. It's just a
Just
spin-off.
yeah, a spin-off. So
It's
maybe
like what
split was the wrong
AT&T did
word.
with Warner Brothers.
Yeah, so I don't know if it's a reverse Morris. I don't think that's been announced yet. I don't think there's been too many details announced, but I'd love to know your guys' opinion. We'll wrap up with this. Is what are you going to do? Are you going to continue to hold both of the J&J companies, or are you going to sell one of them?
I've always, up until this point, I've just said I'm going to hold because, like Darth said earlier, it's like Tylenol, Band-Aid, very staple stuff that people are buying year in and year out. But I don't know, there's some other, because it would be likely in the consumer staples sector at that point. It wouldn't be in the healthcare sector. And just as far as consumer staples stocks, and I could be wrong on this, but this is just what I'm thinking. I don't know. I kind of would rather be in something like Tyson or Kroger if I'm gonna have a consumer staples. So I don't know.
I guess we'll have to see, right? Rain open. We don't have all
It
the
looked like
facts
Ari
yet.
had a thought there.
Yeah.
Just when you said Tyson, man, Tyson's a great stock that I would hold J&J number one, and just real quick on Tyson, that's a buy opportunity if I've ever seen one.
Yeah.
And I think heading into recession, what I keep thinking about is the type of chicken, beef, pork people are going to be flocking to in a recession, and it's going to be your cheaper tiers of beef and chicken, which is where Tyson comes in.
Yeah.
But did you guys buy any Tyson recently?
No.
I buy their chicken and buy their stock. That's all I'd say. Meal prep all the time with Tyson chicken.
I'm still thinking about it. I started reading their annual report, so I have a little better feel on the company. But as you said, dude, just super easy to understand. Beef, chicken, pork, and prepared foods. I mean, that's it. It's just 4 segments. And I think 17% Walmart is their biggest customer, 17% of their revenue. So that's interesting. But yeah, I'm still digging into them. I haven't invested yet, and I may.
Same
I
here.
may.
That's the same boat I'm in with Tyson.
Good dividend
Just
growth rate.
Still chewing on it. But I'm kind of trying to do like you, Ari, a little bit. Pseudo consolidate at most, but at least not add too many positions to my portfolio. So,
Sure.
But it's tough too. Like this is where it gets tough because we're starting to see some pretty good deals out there right now. Tyson, definitely. You mentioned Apple a while back. Like that's looking better than it has for a long time. Target's still looking pretty nice. So there's it's like the double-edged sword of dividend investing. There's either no deals out there to be found, or we're in a position where there's like too many, and then everything gets tempting.
You know what? I'll end with this, and I'll say Warren Buffett has said when they sell, sometimes, and I've been thinking about this as I've been really delving into them, is that if something is cheap and they hold it, but they see something that's really cheap, they'll sell the thing that's cheap to buy the thing that's really cheap. So, yeah, I think that's a good thought. That's where I'd like to leave it with all of you watching. That it's your journey, it's your portfolio. We love sharing what we're doing. Don't copy any of us. Just take our opinions and just use it as more knowledge that you now are aware of. I think so.
YouTube's a good place to go to. YouTube's a good place to go to get ideas, but we're not gonna spell it out from start to finish for you.
Yeah.
Always do
So like
your
for
own
me,
due diligence.
Yeah, I mean, I
Yeah.
review videos on dividend stocks. I mean, the pros and cons of a lot of them. So, I don't give any financial advice. None of us do. None of us tell you to buy stocks. I mean, I'm very realistic with what I do, and I'm very transparent with what I buy. So, I mean, a lot of us also show our rationales as to why we buy them. So, that's the best way to sum it up.
Yeah.
all right, guys. Well, I think that's gonna wrap it up, right? I'm not gonna play my Pee Wee outro. We'll save it for another time. I'm just gonna end it. So.
Well, thank you guys all for tuning in with us, and fellas, thank you guys all
Happy
for
New
getting
Year.
together to do this.
Happy New Year to everybody out there.
It's a rough
we'll
one
have
for
to-
my Buckeyes.
We'll have to do this foursome again soon. This was fun.
I agree. We'll come over to one of your other places next time. So,
Yeah, you guys come on over to my house.
all right, guys.
Dividend
Hey,
app.
everybody,
All right.
have a happy and safe New Year, and we will all be talking to you very soon in our next videos.